Good morning. This is the delayed investment committee meeting. This has been recorded on Wednesday, the 27th of August. Our apologies for the other day, but due to technical problems at Fotis's end, we were unable to do this live. I'm now going to hand you over to Fotis, and he will explain his global macro analysis for the week ahead.
Yes, thank you, Mark. Let us begin with our analysis. This is the analysis that we were going to show you on Monday's meeting, but due to some serious technical difficulties, we were unable to do so. So let us begin. Now, you see, every week we have a nice picture here at the beginning of our presentation. This week, you can see we have Janet Yellen dressed as a hawk. The dovist Janet Yellen is dressed as a hawk and she is looking at the mirror. This was the main theme of last week. We had the Jackson Hole meeting where all the central bankers gathered together to discuss economic policies. And what was important, what came out of this, was that while Janet Yellen is a known dovist, and she is very well known for her economic theories, she came up with some hawkish comments. So that was interesting. And this is what this picture is trying to highlight. But let's all move with our analysis and discuss the major catalysts that triggered important market moves the previous week. Also, we will see news that are important for the week ahead. So what was the most important news from last week? Let's take a look at CNBC, Bloomberg, and Daily FX. So you can see that the main theme was Yellen's balanced approach. It was arguably the most anticipated Fed speech of the summer. Now, while Yellen still sounded pretty dovish and she was very careful about her comments, she is still worried about the labor market and she is expecting some better indications that the labor market is doing better before changing the Fed's policy. But at the same time, her lack of very dovish comments could be taken as hawkish. She also made some comments that could be considered a little bit more to the hawkish side, and we can see we have a shift in the policy, but they start to consider raising interest rates. She said that the economy is getting closer to the central bank's objectives. So what does this mean is that the Fed is shifting to the debate to raise interest rates. So even if she sounded pretty dovish, these comments were enough for the hawks to raise the dollar. This is a signal that the Fed is now actually discussing when they are going to raise interest rates. So initially the dollar firmed, stocks initially rose because also of her dovishness, but then again the signals were mixed. Basically, the most major global macro theme from this is that we have expectations now that rates are rising on the short end of the curve. This is the most important point for you from last week. The 2-year yield briefly touched 0.5%, and I think it actually exceeded this. Let's see some comments from some senior strategists. They say that we do see an increase in Fed funds future rates, and this is reflected in the 2- and 3-year sectors in treasuries. What happens now, it is consistent with the theory that says that the Fed will raise interest rates in the future. So keep in mind that at the moment, this is what has been anticipated from the market, that the interest rates will rise early next year. Again, some other comments. The Fed earlier in the week released the minutes of its July meeting, and again, the minutes indicate that there is some improvement in the economy and they sound pretty hawkish. There is the debate when they are going to raise interest rates. So even if Janet Yellen sounds dovish at the moment, she is waiting to see better indications from the labor market. The debate is going on. So I'm not going to read you the rest of the news. They more or less they are saying and they are explaining the same thing. So this is your number one catalyst, the rise of interest rates in the US. Where is your risk? Is unemployment. This is what the Fed will be looking at. Any signs that unemployment is not doing so well as expected, will cause the US dollar to drop. What about Europe? We had very important developments in Europe as well. Draghi expressed his confidence that stimulus will be ready when the market needs this, and the ECB will do anything that is needed to support the market. The truth is that the Europe economy is not doing well. I think many economists are saying we have outright deflation, and now in the markets and in the news everywhere, they are very actively discussing when the QE will happen. They are expecting a quantitative easing from the ECB. Also, the Russian tensions are definitely affecting Europe. This is also another geopolitical factor that is hurting the European economy. But the main catalyst for the whole Eurozone area for the future will be the quantitative easing. The yields are moving very low. This is an indication that right now the euro, the currency, is very weak. For the first time, we had in the Bund, we had yields below 1%. I think it printed 0.98%, 0.99%. And don't think that this is going to be a low and it's not going to happen again. The yields can move even lower. So we are waiting for any indications from the ECB about the quantitative easing program. Let's look at some comments from some professionals. Todd Lovenstein, he manages 16 billion. He says there is a sense of impatience going on with the deterioration in the Eurozone, and there is growing to desire to see an action plan. So far, Draghi keeps saying that we will do whatever is necessary, we will do whatever is necessary, but he cannot say this all the time. There must be an action plan, and this is what the market is expecting, a solid action plan. What are you going to do to help the economy? We expect to see something like this in the autumn meetings around September and October. The ECB must act. If they don't, this will be considered, very negative, I believe, and will push the euro even further lower. So this is something definitely to keep an eye on. Again, when you have any doubts about what's going on, take a look at the VIX. The VIX will show you what is the perception of the market participants about the future. This is why it is called the fear index. So take a look at what happened last week. From a high of about 17.5, the VIX has moved to 11.63. This is an indication that implied volatility obviously is moving lower. There is an expectation that the tensions between Russia and Ukraine will be terminated. The same is expected for the Israelis and the Palestinians in Gaza. So we see that based on the events that happened last week, the market participants don't have fear in the market. They are not expecting that something really dangerous for the market will occur. They don't see any risk-off events. And we can see this is reflected in the VIX. The VIX is very low at 11.63. So we don't have any indication for some very strong risk-off trends. We have indications in some markets, but we don't have any strong risk-off trends yet. So based on this, you know exactly which assets will benefit. Since the VIX is moving to very low levels, this is definitely very good for the equity markets. It means that equities will try to push to new highs again, perhaps test the highs. There is no fear in the markets. Market participants are expecting that things will calm down in general. And also this is an indication that we might have some preference for carry trades in the currencies. There might be an appetite for higher interest rates, for an extra yield. Let's discuss some specific currencies. I have minimized this chart a lot. And I have done this to show you what happens when you look at the big picture. This is the EURUSD. We have shown this chart also in the past. Look what happens when you take a step back and you look at things from a wider perspective. Look what happens as soon as we broke the trend line. Market starts to move down. The purpose of this is to show you the power of patterns. What happens when some certain levels are rejected and when we move outside the balance area. With some of you, we have reached a stage that we are discussing the auction market theory and how the markets operate as an auction mechanism. Look what happens when we move outside the balance area and we have acceptance of prices outside the balance. This pattern can only give lower prices. So as soon as we broke outside and we had this signal, this is a weekly chart. We had this signal weeks ago. The euro has moved lower from about 139, 137. It has moved now as low or even to below 132. So again, our opinion about the euro remains very bearish. Let's take a look at some other markets. Again, this is the euro. This is the daily chart. Again here, look what happened when we broke the trend line at 137. It is obvious that the euro is at a downtrend channel, and I'm only looking for an opportunity to sell. The only thing that might change my mind is the action plan by Mr. Draghi. Until then, I don't have any other expectations about the euro. I'm only looking for good entry points to sell. Dollar yen. We discussed that the expectations about the US economy is that interest rates will rise in the first half of 2015. This has caused the US dollar to move higher, but now we have found a resistance point right here. Now what is interesting is not where is the entry point and which area is this one. Again, what I want to show you what happens when we break outside of a pattern. Remember again all the discussion about the auction market theory and balanced areas. We have a break outside the balance area at an acceptance of prices. What is your strategy going to be now? Since the expectations are that interest rates are going to rise and the UK economy and the Eurozone economy sound pretty or very dovish, we are looking for a good area to buy the US dollar against its counterparts. So right now I will be looking for the retracement to be complete, and again I will be looking for a good area to buy. Where is this going to happen? You can use Fibonacci, but most important, it is the confluence of support and resistance and Fibonacci. So I will be drawing my trend line right over here, and I will be waiting to see the behavior of the dollar against the yen. But right now the dollar has found some resistance and it is expected to have a small pullback. Now this is the dollar Swissy. Do you remember 2 weeks ago we said when the Swissy was around here at the resistance area, we said the same thing. We have found the resistance area, but the trend is up. The interest rates are expected to rise. And we highlighted 2 areas here with the green where we want to do business. Look what happened. We came down and right at the top of the area we had highlighted, buyers appeared and pushed the dollar Swissy higher. Our strategy hasn't changed. This is our trend line. You can do the same in your chart and monitor the behavior of the dollar when we reach important support points, so very close to the trend line. Since interest rates are expected to rise, we don't change our view about the future. So unless we have some drastic changes in the policy, we still want to buy the dollar against other currencies. Dollar Canadian, the same thing. Again, look what happens when we touch the trend line, push back up again. On Friday, we had important news coming out of Canada that showed that retail sales were a little bit better than expected. So I think this will give the Canadian dollar some strength, but in the long run, Bank of Canada sounds pretty dovish, but the US Fed sounds more hawkish. So again, I'm waiting for the right area to buy. Where is this? Again, throw the trend line in your chart. Do business. Where is the support? We want to buy the dollar against the Canadian at the right areas. Here we have 2 good areas. One is near the support area, and the other one, if we break outside the current highs, and we start having acceptance of prices above this area. Now, it doesn't mean that as soon as we break the high, that straight away we want to buy. No, let us break the highs, stay above there, consolidate a little bit. What we want to see is acceptance of prices at these levels. And then as soon as we see this, we will consider buying. But right now, I believe the good news for the Canadian economy for Friday might have an effect in this currency, and we might see a small pullback to the downside. This is the dollar index. Again, I want you to see the big picture. This is the monthly chart. On the monthly chart, I can see that the dollar index is moving to higher levels. Why? We said the fundamental reason is that we have higher interest rate expectations. But you can see what is the big picture. We are still inside a balance area. This is what the triangle is about. Investors that are used to the old technical analysis would call this a symmetrical triangle. The reason that a symmetrical triangle has any power is because of the auction market theory. What happens now? We are inside the balance area. So we have a balance between the buyers and the sellers. On a monthly scale, the prices are ranging from one level to the other. We don't have a strong trend yet. I repeat, on a monthly level. What we want to see is some strong news, strong fundamentals to break outside this range. I think this is going to happen soon, towards the end of the year, at the beginning of the next, because you can see as we move towards the end of the triangle, the volatility is going to become less and less until we have a breakout above or below. But in order for the dollar momentum to continue to the upside and to be able to push above the trend line and the resistance, we have some more hawkish news. I think the news so far are hawkish, but they are not so hawkish, so that will cause, the US dollar to just move above the trend line and start consolidating above. So maybe this will happen next year when we will have the actual interest rate decision. Just keep this in mind when you are looking at the monthly chart on the US dollar. Remember, this is the US dollar index. So this is what I'm expecting to see. And when I see the US dollar index approaching the upper trend line, I will be looking for signs of weakness in the momentum. Because as I said, I think the fundamentals are positive for the US dollar, but not that strong so far, to move above the trend line. So unless we hear something drastic from the Fed, I think this is going to be very powerful for the US dollar in general. Now, this is the pound. You can see at the big picture, the pound has broken outside the trend line, the weekly trend line, and it is approaching areas that it might find some support. This move is very strong and it will be healthy to have a pullback to the upside. It is a funny thing what happened with Carney, because for a certain period of time he sounded very hawkish, and suddenly, with no indication, they just changed their tune. They started to sound more dovish and worried about growth. I think one member of the British Parliament called him a not trusted boyfriend. He used an expression like this. It was funny, there was some concern also from the parliament about the fact that he sounded very hawkish at one point, and then he changed his tune. Oh, I remembered. He called him an unreliable boyfriend. That comment was from a member of the parliament, because of the fact that they seem to change their minds without any signs, from hawkish to dovish. My outlook for the pound is not very good, and I'm basing my decision also on this technical pattern. I am expecting a small pullback, but overall I will be looking to sell at the right levels. Why am I saying this? The reason is fundamentals. They sound too dovish. They are concerned about growth. And with the Eurozone at this stage, I think this will also hurt the British economy. Right now the economy is doing very well, but in the long run, if your neighbors are in such a mess, this will affect you. So I'm very carefully looking for the economic indicators that are coming out the UK. Having said that, I have two very good candidates to short. One is the GBPUSD. This is the GBPUSD. I have this chart for a very long time. I was waiting very patiently for weeks. I could see the pattern here, and I was just very patiently waiting for a breakout. As soon as that happened, I wanted to sell the GBPUSD. Now, because I missed this in my personal trading, there was another good candidate, and that was the GBP Canadian. It was a very similar pattern. Let me scroll back. So this is the Aussie. So you see what happens with the Aussie dollar. So the pound initially moved higher, but then we had the dovishness from the Bank of England and we broke outside the balance area, outside consolidation. The same thing happens with the Canadian dollar against the pound. We have broken outside the consolidation. We had strong retail sales coming out of Canada on Friday. Even if the thing with Canada's central bank is that they are trying to sound dovish, but the economy is doing better than everyone is expecting. And I think that they don't want to cause their currency to become too strong. So my decision was to sell the pound against the Canadian dollar. That was also confirmed by the technical breakout, and my target is a little bit lower, towards 179.80. This is my first target. My selling area was 1.8150. So again, I think this is a pretty bearish pattern, and I had the fundamentals to support my case. Aussie dollar, I'm not touching it. You can see the consolidation. This is why I minimize the chart so much. It doesn't matter where the price is. We are not trading price, we are trading value. So for me right now, there is no value in the Aussie dollar. It is an horizontal formation. I will be waiting for a breakout, so I'm not touching it at the moment. But if interest rates rise in the US and we start have the US yield to move higher, this could be a very good candidate for shorting. So this is definitely on my radar. Aussie yen. This is the weekly chart, Aussie yen. Again, look at the big pattern. We definitely don't have a risk-off regime. You can remember the VIX was around 11.60, so I don't want to sell the Aussie against the yen, but I don't want to buy either, because you can see on the weekly chart we are right here, we are touching the trend line, and it seems that it is struggling a little bit to move above this. So until I have a very strong indication, a very strong technical pattern, I'm not touching this. Also, my belief is that the equity markets are at overvalued levels, and I would be hesitant to trade a currency that is so correlated with equity markets. Again, this is the Aussie yen. You can see what happened. We broke out outside our consolidation, but still, I prefer to stay away due to the correlation with the equities. But the reason I'm showing you this is that in case that something happens, in case we have a big correction to equities, let's take a look again at the weekly chart. This might be a very good point to sell until the other side of the channel. So keep this in mind. Open your weekly chart on the Aussie yen, minimize it, and draw the trend lines. Just connect the highs and the lows, and you will see the pattern yourselves. Now, this is a very good pattern, and it has caused me some upset because I missed this. Now, I was looking to buy the Aussie against the Kiwi. Look how many times it touched the low and it has reacted. 1, 2, 3 times. So look for things like this, for indications like this. These can be excellent entry points. The Kiwi is very weak. I think right now the New Zealand dollar is the weakest of them all, together with the euro. The Aussie is stronger than the Kiwi, so I will be expecting, the Aussie to appreciate against the New Zealand dollar. So I'm waiting any break above the trend line and a test of that resistance over here. I will be waiting for, to see the break of this trend line to buy. My decision is based on fundamentals. I think the Aussie economy is definitely doing a little bit better than the New Zealand. The New Zealand is not doing so well, also because of lower milk prices. So I have some fundamental reasons to support my case. So another good candidate to buy is the Aussie against the New Zealand dollar. This is the Dow Jones. I wasn't expecting this to happen. I'm going to be honest with you. I was expecting somewhere here when I saw this candle that it would find some resistance and a move lower. This is why we must wait for confirmation also from the technicals to see if your fundamental scenario is right or not. But we are in August, the market volume is very thin, and any news about any geopolitical news, anything that happens is exaggerated. So right now, because of the fact that we didn't hear anything special from Janet Yellen at Jackson Hole, and she sounded pretty dovish, even if she had a hockey stone, that caused the equities to move higher. Also, this is reflected also from the yields that have moved lower. So they think they have no reason to worry right now that the interest rates will not rise straight away. That might happen in the next year. Also, there was a relief from geopolitical reasons. There seems to be an agreement between Russia and Ukraine, and also between Israel and Palestine. So all these reasons caused the equities to appreciate. Again, I'm waiting patiently to see the behavior of the market around these levels. I'm not acting yet. I was expecting something different, because my view is that the market is overvalued, but I'm not going to play chicken with the market. I'm creating my scenario, and then it will either be supported or rejected. What will happen if I see any indications that the market is going to turn lower? This means that risk-off currencies, such as the Aussie yen that I showed you before, will benefit. This is why I'm keeping an eye on this. This is it for me. Now, we will close with a funny match from Janet Yellen. You didn't expect me to be hawkish, did you? That was the main theme from last week, and if you have any questions about our presentation, since it is not live, please you can send me a message or we can discuss it in our sessions. Thank you very much.